We have that rand still trading around 683, 684 against the dollar. So we're holding below that 685, 686 level where we had been meeting some resistance. Do you think we could see further strength coming through for the rand?
Yes, good morning, Stephen. Absolutely right. We eventually broke through that key kind of 86 technical level. And now we're seeing that, of course, the market is moving closer towards that October low of 675. That's going to be the key one. Of course, if that holds for a third time, then I think it's going to be very bullish for the rand, at least for the dollar bulls out there. And we could see the rand then losing a bit of ground once again. It's repeatedly failed to break below that 675 to the downside, and we suspect it will probably hold yet again into year end.
The consumer inflation numbers out yesterday, slightly higher than expected, 3.6% growth year on year for November. Also getting PPI numbers out today. Of course, this is the second last set of data that the Reserve Bank will be looking at when it goes to that MPC in January. Rand, I presume, is also going to be critical to those decisions.
Yes, absolutely. I think the key thing to look out for now is commodity prices, in particular in rand terms. And of course, the rand's been very strong, and it's been tempering high oil prices, high grain prices. But of course, if the rand does start to lose ground from here on out, as we suspect it's going to, then we could start seeing some food and oil-related inflation coming through into the numbers. And of course, they come through pretty quickly when it comes to inflation, because it's obviously big components of the basket, and when it comes to oil, it has a bearing on a lot of components of the basket as well. So we're looking at those rand prices of commodities very closely. We've got one more set of data ahead of the January MPC meeting, but we believe that the market's going to, at least the Reserve Bank's going to remain on hold in January, and the rest of the market also believes as much. The FOMC curve is assigning a very small probability of another interest rate cut at the January MPC.
Quick comments on the FOMC meeting last night, of course the last meeting for the year, and a slightly bearish tone coming out of the Fed Chairman Ben Bernanke.
Bearish tone, and it looks like the Fed's going to remain accommodative for some time. That's going to be supportive of pro-cyclical assets and emerging markets in general. But I think, you know, again, the Fed is ahead of the curve here, and if any of those currencies is going to recover sooner rather than later, it's probably going to be the dollar as opposed to the euro.